Two different things that basically will be two main factors will actually give the metals a lot of legs and cause some explosive growth. With commodities, the reality is when they move up fast. They usually don't, go in a line like this. It's not like a steady investment. That's investment world 101. Commodities are high risk, possibly high reward. And I'll go over those two factors real quick again. Those two factors are that probably really drive up the metals, the precious metals a lot. It would be a major conflict in the Middle East. It does look like Israel is being, they're going to attack Iran if sanctions are backed off. So conflict may be on, including with Saudi against Iran because they're afraid of them having nuclear weapons. That will drive up the price of oil, gold, and also silver. The other thing is, I'm just rehashing this real quick before I go into two other things. The other thing is the problem with the budgets was forestalled in October, and they delayed it till 2014. Now, if you look real carefully what was going on in October 2013, the rating agencies were starting to hint at downgrades and all this type of stuff. If there's a problem where they can't resolve things or they're not doing things to the satisfaction of the rating agencies, where they have a good game plan going to keep things, the debt from growing too fast, like it's always been growing exponentially, there'll be some kind of downgrade possibly. If that's the case, you're going to see a major hit on the stock markets, which are at record highs right now, and you're going to see gold go up a lot. Now, that could bring down oil, though, but the thing is, there's the other factor with oil, that there's something else in the curveball out there, this conflict in the Middle East, so it may not. There's other factors going on. But two things that indicate that the numbers that we look for, the GDP, and, the primary also the PMI, the primary manufacturing index, some of those numbers are probably cooked, is like especially out of Chicago, where they came out with 65.9, which is the best growth they had in 30 years. From in October, they said that they had 65.9 for primary manufacturing index. But two indications that say those numbers are cooked is one, and I don't have the recent numbers on the garbage index, but there's other things out there. They call it the garbage index. Basically, it's like how much garbage is being trucked by train railway cars, waste management trucks by train railway cars. The correlation between the gross domestic product growth and the garbage index is 82%. This was calculated by Bloomberg. It's an old article, and they don't actually put out charts on this. They should, but if they put out charts on this, too many people would look at them, and so they do a compilation every once in a while. But the garbage index has actually been a lot different from what they paint the picture as. The rosy economy is being painted as going up. It's looking better. There's recovery, but the garbage index looks like it's going down. Now, typically, there's been an 82% correlation. Now, I got this from an article back a couple years ago from Bloomberg, but I paid very careful attention to it because it's one of those common sense indicators that a lot of people don't see that often, because you actually have to compile it from a lot of different statistics, and it's not like a ready chart that somebody can just look at and look up and say, here's a link on this chart and here it is. But the garbage index has been going down. Now, the other thing is, that's 82% correlation between how much you throw away and how good the economy's going. So the more the economy's hustling and bustling, the more stuff people throw away. Makes a hell of a lot of common sense, doesn't it? Now, there's another thing out there. There's another factor you can look at, and this you can almost look at real easily, and it correlates with something else, real simple 101 common sense that tells you the economy's not that good. You get the stock market's going up, and they're telling you everything's great, and they're telling you all these numbers are really good, like the Chicago PMI is 65.9. HSBC has kind of hit their targets with China's numbers are like 51 point something. Those are the brand new numbers that came out. Everything's looking okay, right? Yeah, something's really wrong though. Something smells rotten. I think those numbers are cooked. And the other index out there that you don't see too much about is actually deliveries of metals. metals, not precious metals, but base metals, deliveries of metals. Now, that's another thing that you just can't look up on a chart, but there's another way to kind of give you a roundabout indicator to tell you how healthy the economy is. But the deliveries of base metals, if you compile all the statistics, I'm not going to do it, but I'll just tell you how you can really check, what's going on very easily. But the deliveries of base metals tells you the underlying strength of the economy. Obviously, when you have a strong industry, they're requiring more base metals, like copper, for one, is a good example, right? But deliveries of base metals is a 79% correlation between deliveries of base metals and the gross domestic product. The growth in the gross domestic product. That was something else I saw in Bloomberg a couple years ago, too, and I took very careful note of that because it makes a hell of a lot of sense. Because in a healthy economy, there's going to be a lot of demand for industrial metals, correct? Now, the thing is, demand also equals price. The other thing is, you could say, what sector in the equities is actually doing very poorly? It's the mining sector. Why is that? Because there's not a good big demand on the base metals. Not just the precious metals, not just silver, but also copper. And why do they call it Dr. Copper? Because Dr. Copper is a very, very, very good measure of the actual productivity that's going on in the world. Actually, it relates very much to the construction industry, besides, inside, the wiring of all the infrastructure out there. But that's related to the construction industry too, because when they put in new towns and new roadways and everything, they have to have copper for the wires, right? Copper has a lot to do with overall manufacturing. Now, you might be thinking there's a lot more sectors to the economy than just basically a factory. But let me put it to you this way. Copper also has a lot to do with construction, and also base metals have a lot to do with construction too. Construction, real estate is actually, when you take the total aggregate of all the subsidiary industries are all around construction and everything, it's basically 50% of the economy. And being that copper is the most vital metal we have going, and the price is going down, and the mines are actually looking like they're hurting right now, that's telling you the economy is not good, yet the stock market is at record highs. Something is not right. Okay? This is one reason I want to just keep urging people to stick with your investment on the metals. It's going to change out. I'm not going to see, unlike these other guys out there that just tell you, "Oh, the sky's falling." I'm pointing to you some reality. It's not like, it's almost like you're looking for the grass to grow right now, and it's like, it's not happening because you're watching it every day. But the thing is, with metals and silver and stuff like that, the grass doesn't kind of grow like this. Maybe it's underground and the seed is starting to sprout. And when it starts breaking through ground, you're going to see this, the grass start shoot up real fast. That's pretty much how silver works. When it starts getting legs, it really runs, right? So, but the thing is, the two main factors, again, I think the conflict in the Middle East is actually going to be the one thing that's really going to drive up the gold prices, oil and silver, more than anything. And that is actually probably going to affect the markets in a bad way, the equities in a bad way. So we might see this, where the markets are going up and the metals are going down. The inverse is going to start happening over the next couple years. And we shall see. But again, the stock market indications out there, where we actually are now over 16,000. I know there's a pullback today a little bit. It doesn't make any sense at all. And, it's actually really, I'm not just pumping. See, what I'm trying to do is, when I present this, I don't want to just say, it's the Fed doing it. Oh, the plunge protection team is pumping up the markets. It is, though. But I'm trying to show you that in reality, how that is, why that it really is that way. Because stock markets in general should be reflecting what the economy really is, and they're telling you, oh, the economy's good, but the economy can't be good because of what I'm telling you about, specifically the base metal prices, for one, and Dr. Copper. Dr. Copper. And another thing is actually Nouriel Roubini also talked about the real estate, even globally. He's looking at there's a number of areas that are look like they're in a bubble across the globe in real estate. And just remember, real estate, you want to look at that market very carefully because it's telling you what's going on with the overall economy. And if things are in a bubble, that means it's speculative money going in there. Because even in the United States, the indication is that even though the house prices are going up, and even though the revenue's going up, there's less number of homes being sold. So that means it's probably like higher end buyers are bidding up something. You know what I'm saying? That type of stuff. So, do expect things to turn around for the metals for these reasons because, like I'm just stating, the underlying economy is actually not good and it's being pumped up artificially. Now, I know they always have a way to rig the market prices on metals up to a point, but at one point in time, that market rigging is probably going to go in our favor. So in other words, market rigging could be rigged down and it could be rigged up. I know there's always that contention, and actually I think it's a very true contention. Actually, I'm going to put another link. I'm going to re-show that link on the bottom of the information box about the oil price market, spot market price rigging, where actually there's high-end people bringing this to, as a lawsuit out there, but it also applies to the metals. But the thing is, when the metals are being allowed to fly upward, like in other words, say silver was at $40, the mines would be very profitable. But it may actually go a hell of a lot more than $40. And see, that's what I'm saying. It's probably going to be, when it breaks at some point in the future, it's going to be rigged upward. They're actually be rigging it upward. It's actually going to go in a spike upward. And that is definitely the time you don't want to be buying. Okay, so let me just tell you right now, even though things look depressed, that it's always the time you want to hold an asset like silver, because it's when it's looking like a bad investment, it's a matter of patience, and it's going to play out very well for you. It will play out very well for you. Later on, when everybody is out there telling you the sky's falling, and the Illuminati and the banksters are on the run, and silver's hitting some astronomical highs, that's when it's going to be getting dangerous. But who the hell knows how high it can go? Be careful. Take careful note of the Bitcoin's lesson, because you think 200 is high, 300 is high, 500 is high, 1,000 is high, 1,200 is high. Who the hell knows where it can go? And but and my contention is on Bitcoins. There's like I'm going to throw something in on here, because there's been about 50 other types of crypto electronic currencies out there since in 2013, just in this year, that have came out since Bitcoin started going up. I kind of wonder about that stuff, because it may actually crash pretty fast. But then again, who the hell knows where it can go? But just remember, at one point in time, I almost think the precious metals are going to hit this kind of bubble mania mode like that, and it's going to be very difficult to know when the exact peak is going to be. But as much as they manipulate it down, later on it will be manipulated up. Just remember that. So just hang in there, man. Just hang in there, because I'm throwing you some real common sense stuff out there that unlike just telling you go buy silver or something. Okay? I'm putting some real common sense stuff out there, so just hang on.